Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Happy New Year, everybody. Looking at Apple to wrap up 2016 daily, weekly, shorter term time frames. And we're still testing a key support. We did dip below it again, but the bulls bought that dip, closing above it. And I'm looking at 115.64. It was the low December 16th. It was the low of December 22nd. Bulls bought that dip December 23rd below it, and they bought it again here to defend that support to end 2016. If we close below it, we're looking at the middle Bollinger Band daily support, and then I'd be looking down at previous resistance, now support 112.42, 112.47. So the bulls have control of the trend. Apple is one of the stronger tech names that we've been watching, but normal healthy consolidation occurring with the weight of the overall S&P 500 as it consolidates as well. SPY, the S&P 500, lost the middle Bollinger Band support on Friday, so we do still have that level, and it is going to be a key level early this coming week, so we need to update that every day, and we're on the verge of a bearish MACD cross. So this position we find ourselves in on the weekly time frame is interesting because we have a bit of a double top, 118.08 and 118.02, and now we're consolidating. Bearish reversal candlestick on the weekly time frame. A red week this coming week, and we're going to be looking at the middle Bollinger Band on the weekly time frame, which will be lining up with those mid 112s that I just pointed out on the daily time frame over the next week or two. So that's a target. We bounced off of this middle Bollinger Band weekly 4 weeks as we continue to show strength. So we'll be keeping an eye and making sure the bulls can hold that level. A lot of people misdiagnose a cup and handle pattern. It's probably the most misdiagnosed pattern that I see. And at this point, we have the shape of this cup and handle pattern where we have the left side of resistance, the pullback in a nice rounded fashion, and then our right side of resistance lower than the left side, showing the bulls unable to break to higher highs. Then we consolidate and form a handle of the cup and then break out to higher highs. Not saying that is what is going to happen, but the shape of the pattern is here. And we'll see what this consolidation does look like. And if it shapes up similar to a bull flag after these 3 green bull weeks, then we will look for the potential of it being a cup and handle leading to further upside. Obviously, the S&P 500 would have to show some strength and hit new all-time highs after this consolidation period for that to occur. So keeping an eye on that overall. Looking at Apple on the shorter term time frames, bears took over about a half hour into the trading day on Friday. Apple held up better than the S&P 500 to start. And again, that's because it is one of the stronger tech names. So we saw names like Facebook with lots of weakness, but Apple certainly stronger than Facebook, so held up a bit better. That being said, once we lost all 5-minute moving average supports, and once we hit a new low of the day, we saw a big time dump, and then from there it was mostly lower highs and lower lows, with the bears in control the rest of the day. So looking at the hourly time frame, we have lost all hourly moving average supports. We'll have to keep an eye on them as we back test and reject from them. We can see the 200 period hourly support held a couple candlesticks to start Friday and then lost it. So that level is 116.30, and we will back test that resistance if the bulls do show up early next week. So Apple consolidation occurring, keeping a close eye on the correlation between the S&P 500 and Apple, and we'll see if the middle Bollinger Band on the daily time frame can hold its first test. I appreciate you watching, and we'll see you to start 2017.